Welcome back to the channel. Today we're conducting an in-depth breakdown of Zscaler's Q2 2026 earnings results. As a pioneer in zero trust security and cloud transformation, Zscaler's performance is a major benchmark for the health of enterprise cybersecurity spending. With the stock reacting to recent quarterly figures and analysts adjusting their forward-looking models, there is much for ZS investors to understand. Before we dive into the specific charts and data tables, please like this video and subscribe to the channel for more institutional-grade market analysis. Let's get into the Zscaler report. We begin with Zscaler's current market standing on the Nasdaq. As of the latest reporting session, ZS is trading at $151.61, marking a modest intraday decline of 1.43%. The chart highlights the recent price action following the earnings announcement, with the stock seeing a $2.20 decrease in the most recent session. This snapshot provides the essential context as we transition from price action into the fundamental financial statements. Understanding the current market valuation is vital as we analyze the underlying revenue and profit data that will likely dictate the next major trend for this cybersecurity leader. As a key component of the Nasdaq indices, Zscaler's performance here often sets the tone for the entire cloud security and technical infrastructure space. We will now move into the specifics of their latest income statement to see what drove these recent market movements. The income statement reveals the continued scaling of Zscaler's operations in the most recent quarter. Total revenue for Q2 2026 reached $815.5 million, representing a 1% increase compared to the previous quarter. Gross profit remained exceptionally strong at $620.05 million. However, the company reported an operating loss of $52.BA million and a net loss of $34.1 million for the quarter. These figures highlight the company's aggressive investment strategy during a period of rapid market expansion. The visual data shows a clear and steady quarterly revenue climb, reflecting the company's success in capturing enterprise cloud security demand. For investors, the key narrative is the balance between massive top-line growth and the path toward GAAP profitability, as Zscaler continues to prioritize market share and platform innovation over immediate bottom-line returns. Breaking down the revenue by segment, the dominance of Zscaler's partner-driven model is immediately apparent. Last year, the company generated $2.7 billion in total revenue, with the vast majority, $2.7 billion, coming from its top-performing segment, channel partners. This marks a significant increase from the $1.2 billion reported the previous year. Direct customers also contributed over $312 million. Geographically, the United States remains the largest single contributor to the company's success, providing $1.7 billion in revenue. This diverse but focused revenue mix, spanning across global partnerships and direct enterprise sales, provides Zscaler with an incredibly scalable business model. The rapid growth in the channel segment, in particular, highlights the company's success in integrating its zero trust platform into the global IT supply chain. This segmental strength ensures that Zscaler can capture diverse security spending trends across the globe. The EPS and revenue snapshot provides a look at Zscaler's recent performance relative to analyst expectations. In the most recent quarter, the company reported an EPS of $1.01, beating the 0.9 estimate by a significant 12.2%. Revenue for the same period reached $815 million, surpassing the $798 million forecast. Looking ahead to the next report date in May 2026, analysts are currently projecting an EPS of 1.01 on revenue of $835 million. This beat and raise pattern has been a primary driver of investor confidence over the past year. The long-term forecast for the remainder of 2026 shows a projected continued climb in quarterly earnings, reflecting the market's high expectations for the company's ability to monetize its platform at scale. This consistent delivery of results against professional models is building shareholder conviction. The detailed revenue forecast chart visually confirms the steady upward trajectory of Zscaler's top line. The orange bars represent reported revenue, while the gray bars indicate analyst estimates. In Q2 2026, we see the clear beat with revenue landing at $815 million against the $798 million estimate. Looking forward, the forecast bars point toward a consistent quarterly increase, with expectations reaching nearly $1 billion per quarter by early 2027. This upward staircase of estimates reflects Wall Street's belief that the move to cloud-native security is a long-term structural trend that favors Zscaler's architecture. For analysts, this chart is the benchmark for measuring the company's growth momentum. The fact that actual results have consistently landed above the estimated circles is a reassuring sign that management is effectively capturing the available market opportunity. Seeing these forecast bars move progressively higher confirms the strength of the current demand cycle for zero trust solutions. Looking at key valuation ratios, Zscaler's stock currently reflects its high growth position in the cybersecurity sector. The trailing price-to-earnings ratio, or PE, stands at 8.8, while the price-to-cash flow ratio is 28.9. These metrics are a critical benchmark for evaluating the stock's current price relative to its historical performance. The company displays a total enterprise value to EBITDA ratio of 1.san-psi-k, highlighting the premium the market places on its future cash-generating potential. The visual data tracks how these multiples have shifted over the last 5 quarters, with a notable uptick in the price-to-cash flow ratio in the most recent quarter. This expansion in multiples suggests that investors are willing to pay a higher premium for each dollar of Zscaler's cash flow, likely due to the company's dominant role in the security transformation market. For investors, these metrics are essential for assessing whether the current valuation accurately reflects future growth. Zscaler's balance sheet reflects its significant financial scale and solid equity position. Total assets for the most recent quarter, Q2 2026, stood at $6 billion, representing a 3% increase from the previous quarter. On the other side of the ledger, total liabilities increased slightly to $4 billion. This results in a total equity position of over $2 billion. The visual data shows a steady expansion of the asset base over the last several quarters, which is typical for a high-growth tech group building out its global infrastructure. For analysts, the relationship between the company's asset growth and its liabilities is a key indicator of its long-term financial stability. The scale of this balance sheet provides Zscaler with the financial muscle to continue investing in its platform and to weather potential macroeconomic headwinds. Understanding this position is essential for evaluating the company's overall solvency and its ability to fund future research and development initiatives. Cash flow generation remains a foundational strength for Zscaler. For the full year 2025, the company reported $972 million in cash from operating activities. Free cash flow for the most recent quarter, Q2 2026, was $169 million. On the investing side, the company saw an outflow of $360 million in the latest period, reflecting continued deployment of capital into long-term growth opportunities. Financing activities resulted in a modest inflow of $21 million. These figures demonstrate Zscaler's ability to generate significant amounts of real cash from its operations, which is then used to fund its expansion. The production of operating cash is the engine that allows Zscaler to maintain its competitive edge while scaling its global operations. For analysts, the strength of the operating cash flow is a reassuring sign of the company's fundamental health, proving that the underlying business model is capable of supporting its ambitious scaling plans. In conclusion, Zscaler's Q2 2026 results reveal a company with an exceptionally strong growth engine, led by its dominant channel partner network and its leadership in zero trust architecture. From consistent revenue beats and record segment revenues to a robust cash flow engine and a solid balance sheet, the fundamentals remain healthy. While the company continues to operate at a GAAP loss due to its aggressive expansion, its high-margin revenue model and strong enterprise adoption provide a powerful tailwind for the foreseeable future. Zscaler remains a critical player in the global technology market, providing both growth potential and essential security services for the cloud era. Thank you for joining us for this deep dive into the numbers. Don't forget to like, subscribe, and hit the notification bell so you never miss an institutional-grade analysis of the markets. We'll see you in the next analysis.